this is one of the biggest benefit which exists, benefit in points. Many companies, they give their employees cars. So implies a tax on the provision of motor car for private use. The taxable benefit is based upon the list price of the car when new, reduced by any capital contribution by the employees up to maximum of 5,000. One thing is interesting about the list prices. For example, I saw a car. I want to buy a car, electric car, and the list price of that car is like 31,720 pounds. However, on offer, I can buy it for 23,000. So the amount which is being paid actually is not relevant in this case. You actually look at the list price, so that is the taxable benefit, and if employee pays any contribution towards this, that would be reduced up to 5,000 pounds. So the taxable benefit is calculated. Now this is very complicated, and it is based on the emissions of the car. If it's electric, there's no benefit in kind. So that is a big trend nowadays. But if it does emit some carbon emissions, then there are benefit in kind if over 75 grams per kilometer. So next table actually gives us a list of that data for. So it says that if it's zero rated, obviously if it's electric, then there is no benefit in kind, and the employee would not be paying any tax on that, and employer would not be paying any national insurance on that. How good is that? Then we have 150 gram emissions, 2 to 14%. The good thing is, because both of the tests we have in this module, they're open book, so you will have all this data with you. Before the final exam, I'll actually give you some guidance on how to keep that data in front of you so that you can use. So this is one thing which you will need in your exam, or you may need. I'm not promising that something like this is coming in the test, but you may need. So this is the data, and these percentages: 2% lower if the car was bought in this tax year, 6 April 2020. One thing to be noted: if it's a diesel car, then these percentages, you will add 4% to all of these, not to zero. Diesel is never a 0% anyway, but if it's a diesel car, you will add 4% to these values. For example, 15% will become 19%. However, you can never have a percentage more than 37%. That's the maximum limit of the benefit in. So what you do, you basically multiply 37% with the list price, or whatever the percentage is, with the list price of the car, and that's how you calculate the benefit in kind. Again, if the motor car was not available for the whole tax year, or if it didn't get used for 30 consecutive days, then it will be reduced proportionately, 11 by 12, 10 by 12, whatever the usage was. Any amount paid by employee towards running cost apart from fuel, so could be MOT cost, could be servicing, for example, it reduces the taxable benefit. Employees are given car, and then they're also given cost of the fuel. So employer pays fuel for that. Most of the employers have these cards, fuel cards, and the employees uses that. For example, those employees who are on the road, area managers, and people who go from different shop to shop, and for marketing purposes. So for fuel provided to an employee for private use give rise to a further taxable benefit in kind. Obviously, if it's job related, then there is no cost. The benefit is calculated using the same percentage as is used in the calculation of the taxable car benefit. So if you have, let's say, taxable car benefit of 25%, you will multiply that for the car benefit to the list price of the car. However, for the fuel, you use the same 25%, and then you will multiply this to 24,500, which is the amount for this year. It could change next year. For 2021, you'll multiply that with 24,500, and this will give you the fuel benefit. For the employer may have paid less or more, but this is the benefit it will be taken. If the employee pays all of the fuel cost, then there's no benefit in kind. However, if it makes partial payment, then that partial payment is ignored. So there's no point making that partial payment. You either pay full or you pay nothing. So that's what should be done. That you pay all or nothing. Throughout 2020 and 21, Miranda is provided with a petrol engine motor car. Petrol is important because diesel would have 4% extra. 113 grams per kilometer, which was first registered in 2009. So it was not bought in this year. That's why this information is important. If it's bought in this year, then you'll have 2% less. Her employer pays running cost, all the running costs. The cost of the petrol used for private motoring is £1,795. Calculate the taxable fuel benefit arising in 2020 and 21 tax year. If the amount that Miranda reimburses to her employer for the private fuel is three different scenarios: nothing, 1795, and 1750. First of all, let's look at the how much the cost is. 20% was calculated using that table. It's more than 75 gram. It's 113 grams. Our base rate is 20%, so we use that 20% plus 5 grams and 1% increase. So if you move on from 75, 5, 80, 85, 90, 95, 100, 110, that's 7. So that's 7% extra. So that makes it 27%. And then list price, well, it's not the list price. The standard amount is 24,500. So it's 6,615 pounds. If Miranda pays nil, since Miranda pays the full cost of the private fuel, then nothing will be part of benefit in kind, but it needs to be paid before 6th of July 2021. And in case of C, which is 1750, Miranda contribution is less than 100%. So the taxable benefit is 66115. So she would rather pay 1795 actually, because it's quite a quite a lot of difference. 1795. So that's what I was saying, that employer could pay a different amount, which could be more or less than that, but you would have to pay what is the standard amount is. And standard amount is 6,615 pounds, and the employer paid only 1,795. So it's worth paying that amount.